Dividend growth investors, bonjour. This is Mike Héroux, founder of Dividend Stocks Rocks and passionate investor. And yes, I'm wearing the same hoodies as last week because I've recorded two of those videos back to back. I'm hosting this YouTube channel to help you invest with more conviction so you can enjoy your retirement. And one thing that could help you out and move the needle is to make some speculative plays. Today, we're going to talk about two companies that could go either way in 2022. And the reason why I wanted to talk about speculative plays is mostly because I like to make them in my portfolio. I am not a speculator per se, but I love to do some active trading from time to time. So I have 90%, 95% of my portfolio geared toward my basic strategies, which is dividend growth investing. And then I'm using 5 to 10% of my portfolio to invest in companies that could be a quick win, or sometimes it's a quick loss as well. Today, we're going to look at one Canadian, one US. This is part of my top picks for 2022. If you want to have more idea, link below, and you're going to be able to download the top stocks for 2022. This is an excerpt of my original book that I've sent to my DSR members back in November of 2021. So they had time to read, prepare, ask questions, and now they started the year on the right foot. But you still have another six ideas actually. So 2 Canadian, 2 US, and 2 other speculative plays, which is kind of interesting, right? So now let's move on to the first one. Sylogist, you've probably been used to see that name, SYZ.TO, company that just went on the TSX this year, well, not this year, but in 2021. It was on the TSX Venture before that. So pro rating of 5, but dividend safety score of 3. Reason why is they used to increase their dividend year after year. They offered even 2 dividend increases in 2020, but no dividend increase in 2021. Is it a problem? I don't think so, but we're going to talk a little bit more about what's going on in terms of payout ratios and earnings later on in this video. But this is why the dividend safety score is not that strong so far, but still you're being rewarded with a 4% yield, which is pretty good. And the dividend growth, if you're looking at the annual dividend, has been increasing since 2011. We might run into a problem in 2022 if there's no dividend increases, but we'll see what's going to happen. This company has the potential of being the next OpenText or the next BlackBerry. So Sylogist, in a few words, what does it do? Well, it's a SaaS, so software as a service. So think about you're paying every year for your Microsoft Office license, for example, or for Windows. It gets updated automatically, and it's just generating recurring revenue for Microsoft. This is exactly what Sylogist does, but they actually have a different type of clients. We're talking about schools, about government, and nonprofit organization. Company that is relatively small. We're talking about like $40 million in revenue, which is not that much, right? And 80% of that is recurring, which is really great. Another thing that I love about Sylogist is that the fact that they have like 2,000 customers and they keep most of them year after year. So we're talking about 97% rotation rate, which is pretty good. And there's plenty of room for growth as they have less than 1% of market share in these places. So in terms of services, they offer like classic stuff like ERP, CRM, and analytics, basically to help schools, nonprofit organization, and government institutions to manage payrolls, information, grant management, victim case management, HR, purchasing. So all the different things that you need your database to be up and running with a great software that will help you to manage all of this. This is what they do. In terms of diversification, as I mentioned earlier, 1/3 education, 1/3 nonprofit organization, and then a little bit more government and other. Mostly in the US now, they've made a major acquisition, and this is one thing that I really like about that company. There has been a lot of drama over the past 2 years. Before that, they had a CEO that focused a lot more on profitability, so the company had virtually no debt most of the time. time, and they increased their dividend all the time. And it was like really a ship that was like tightly managed, like focus on cost of operation, making sure that margins are stellar and that the company is making a ton of money. Moving on to 2020, at the end of 2020, new CEO, and then 2021, the CEO says, you know what, let's use our line of credit for something. So they started to make acquisition. They were losing talent, so they had to increase salaries and pay bonuses, and that actually hurt the earnings. What you can see on this graph, and this is the result of what happened over the past 2 years, you can see a lot of fluctuation for earnings, no growth, and obviously the payout ratio is now through the roof. The reason why I don't really mind about showing a high payout ratio at this point, I'm not worried about dividend, not one bit. Probably it may not increase in 2022, but I have big doubts it's going to be cut. The thing is, the company is now focusing on growth. They had a few bad quarters in 2021. The pandemic kind of like slowed down their backlog, and the market was expecting more acquisitions. So they had a big one at the beginning of the year. So the stock price went up to like 18 bucks, and then things went sideways. So when you look at the dividend triangle, you can see a big peak and then a big drop. I think that the lowest point in 2020 and 2021 was like 9 bucks or something. Now it's back to like $12, $13. Expect a lot of volatility. This is why it's part of those speculative plays. You can see that earnings have been hurt a few times, and then management said during the call, the earnings call, for a few times, you know, we were expecting growth in 2021. It didn't happen. Government put some pause on their budget. Some non-profit organization in school are having problems with like online school and not online school. So they have like other problems to manage than looking at their data system. Hopefully, we're going to move into 2022 with a little bit better situation for the pandemic. Good thing is the latest quarter was actually a lot better. They showed growth. And while management said, you know, don't expect growth until 2022. So that happened a little bit faster, which is really good news. And the other thing now is that they made a few more smaller acquisition, but pretty much the same principle, using the line of credit to make bolt-on acquisition that are already operating with either schools or non-profit organizations. So it's really what they do. It's a market that is highly fragmented. I love the fact that it's a recurring source of revenue, and I'm hoping to see revenue and earnings growth in 2022. So then again, small cap, tech stock, expect lots of volatility, but in the end, it could go a lot better, and then you can make some money out of this one. So before we move to my second pick, which is actually even more interesting, and it was my Christmas gift. So I bought some shares of this one during Christmas time in 2021. I just want to remind you to give me a thumbs up. Tell me what you think about Sylogist and what you think about my next pick in the comment, and also to follow this channel. So I publish a new video every Thursday. We're going to talk about a bunch of interesting topics in the upcoming weeks, so you don't want to miss that. Now, moving on to the next one, which is Activision Blizzard, ticker ATVI. So the company shows a pro rating of 4, a dividend safety score of 4, obviously a very low yield, so you're not going to fund your utility payments on buying ATVI, but that could be quite interesting. Also, very important to note, this company pays an annual dividend, so once a year, but it's really more a growth play than a dividend one. The company has actually 3 businesses. The first one, Activision, which is known for the famous Call of Duty. If you have teenagers or if you have a PlayStation or Xbox at home, you know what I'm talking about. So war game, first-person shooter. You can now log in onto servers and play against other players online. They have over 100 million user that plays every single day, I would say, and that makes 47% of their revenue. Another third of revenue is created by King. Candy Crush, anyone? So pretty much when you're looking in the subway and someone is on their iPhone like this, chances are they are playing a mobile game that is being offered by King. And finally, we have Blizzard for a quarter of revenue, known for Diablo, World of Warcraft, and actually a really time-consuming piece on my phone, which is Hearthstone. Yes, I do play Hearthstone from time to time, actually pretty much every day, but I know I'm trying to cut down on those games, but still having fun. What I like about this business is they have very, very strong brands. Yes, you can do another 3D shooter about war, but it's not going to be the same thing as Call of Duty. Every single year when they launch a new version of those kind of games, they are highly expected. It's like movies basically, and they kind of made a smart move buying King a few years ago because they saw that a lot of people are going to consoles like PlayStation and Xbox, but also a lot of people are playing on their tablets or smartphone. So now they're covering both, and they're adding a lot of growth potential as people are moving towards more the gaming industry. There are possibilities with NFTs and the Web3 I mean. So that could also open a few more doors, and that's very great. So now, how in the world I'm telling you about this company if everything is wonderful, right? Well, the problem is they kind of have like some major issues in terms of sexual harassment and then misconducts, and basically they're not necessarily an ESG investment right now. What happened in 2021 is several lawsuits were made. The CEO knew, and then a lot of upper management were involved at this point, or just decided to not do anything. And they started their latest presentation about that, a commitment to a safe, inclusive working environment. So they had like one of their first slides were all about saying, hey, we're cleaning up our mess. We make sure that everything is going smoothly now, that we respect our employers, obviously our employees. Obviously, they lost some talent. Some others are not super happy. And when you're in the video game industry, talent is hard to acquire and to retain. So when you have talented people, you want to keep them. So obviously, stock took a major hit. As you can see, it was trading around $100, and then it went down roughly, like lost about 45-50% of its value. Now going a little bit upward, but not too much. My play here as a speculative one is, I think they will clean up their mess. There's like two different things. What happened there? We need to penalize those people that did the wrong, and they should not work for Activision anymore. And this is very bad. But what I'm looking at is you cannot penalized so like thousands of employees that has nothing to do with that are working on great games with great potential. That is something completely different. So yes, there's a culture that needs to be changed, and those problems needs to be addressed and fixed. But moving forward, I think that once this is done, we're going to see a company that was thriving and will continue to thrive. As you can see, earnings are going up, revenue is going up, and then dividend is going up. The other thing that didn't help them though is they started to get late on some games. Whenever that happened, it's pretty much like if you're developing a new technology, or if you're about to present a new movie and you say, oh yeah, it's not going to be for summer of 2022, it's going to be for September, and then you're missing like the big summertime of box office, and the market get disappointed. Well, that wasn't expected. So I was editing the whole thing, and then I realized that my last minute of the video has been completely blurred. So sorry about that. Had to redo it again. So what I was saying about Activision Blizzard is they went into a perfect storm with game delays and then lawsuits and losing some talents. But in the end, it's still an amazing company with strong brands, with a lot of potential moving forward, and also a lot of potential with NFTs and Web3. So hopefully they're going to move towards that direction and they will expand their video games. So I hope that you have enjoyed this video. Go in the comment, let me know about your speculative plays. I'm curious to know about which stocks you think is going to beat the market in 2022. And until the next video, stay invested.